All right, no members of the public, so we will convene. First,
Carl is on the call.
Oh, Carl is on the
So
call.
you know he's there.
No, I didn't realize he was joining us at all. Hi, Carl. Taking time from your busy PR schedule to join us remotely.
Again, silence.
So first item on the agenda is the approval of the minutes. May I have a motion? So moved. Thank you. Second.
A second.
Thank you very much, Paul. Any comments or questions on the minutes from the last meeting?
Really?
Yes. Oh, I'm sorry. Thank you. Thank you.
Mike,
Quite all right.
okay, I got it.
I think I was looking that way, looking for Paul to give my second, because he's usually my second guy. So thank you, Mike. Any comments or questions on last meeting minutes? Hearing none, all in favor of approval? Aye. Any opposed? Any opposed or abstained? All right, they are approved unanimously. Next, an action item is the IPS revision that was proposed last meeting by Kevin. I was assuming that Leanne would walk us through this. I'm really gonna miss her.
Yeah.
Are you able to fill us in as to what we're revising?
I didn't read this ahead of time.
Yeah, so basically it's just two different updates. One was we had the Barclays aggregate bond index as a bond is the bond portion of the IPS. We have to update that to the Bloomberg aggregate bond index because Bloomberg purchased those indices about, I'd say, 3 or 4 years ago. So Leanne sent me a clean copy with those in there as well. And then there was just a portion that we wanted to update that talked about state statutes and things of that nature, and we wanted to just put in Connecticut state statutes. That's it, just to be more, direct.
Well, thank you. And there's a memo in your materials that explains that not as well as you just did. So if it's an action item, I guess we have to vote on it. Can we have a motion to vote on it?
I'll make a motion to approve the recommended changes in the investment policy.
Thank you, Leland. Second?
Second.
Thank you.
Well, she gives you a motion.
Does she?
The motion is to approve the modification to the fire department pension plan document.
Oh, we're not on that one yet.
You're not on that one. Okay, very good. Sorry
Okay.
about that.
No problem. So I think we have the motion as Leland stated it on the table. Any comments or questions? Okay, then we'll vote. All in favor, vote aye. Aye.
Aye.
Any opposed? Any abstentions? Hearing none, it is approved and the IPS has been amended. Thank you for that. Okay, our next amendment, which Robert reviewed, is the fire department pension plan modification. We do have in your materials, we have a letter from JT as well as a draft of the modification. But JT, thank you for joining us. Feel free to fill us in.
Thank you for inviting me. Every 5 years, the fire department reviews its bylaws. The fire department has a lot of requirements for the membership to maintain their membership at a specific level. We get the tax abatement that's 200 points in a fiscal year, July 1st to June 30th. There's no call requirement for the tax abatement. But when they looked at the overall membership, we have over 80 members in the fire department. 3 to 5 people per year earn their points, meaning 150 points in a calendar year to get a pension year, but may not make sort of a threshold of responses, like actually going to calls. They'll go to calls, they just might not make, a certain amount. The fire department does about 500 calls a year. And so we've always said, hey, if you can make 10% of the calls, that'd be great, because you get 3 points for each call. 10% of the calls is 50. You earn your pension year by actually going to a fire call. We get 3 points for training when it's less than 5 hours, 6 hours in a day. We get 6 points if your training session is over 6 hours in a day. We get 1 point for each work detail or activity. So like I get 1 point for attending your meeting today. I have to make 150 points in the year to have that year count toward the pension. They wanted to add, instead of encouraging people to make a certain number of calls, we wanted to codify into our bylaw to make a requirement. We looked at the last 4 years of the pension report versus against the points and the calls. It would affect 3 to 5 people per year. Our goal, though, is to have it affect no one because everyone will make the minimum of 30 calls a year. 30 calls is, 60% of the points that went toward your pension will be actually done by responding to an emergency call. That's all hours of the day. It's all the time. So the membership discussed it and it was added to our latest bylaw revision. In order for it to mean anything, though, it needs to be in the pension plan. Otherwise, the two conflict. So that's why the fire department wanted to bring it to you to codify.
Well, thank you. Thank you for
Very
your
good.
work reviewing your own plan. We do it that regularly. But being on top of it is great. Thank you. Any questions for JT before we have our motion? Okay, and so
Rowena, I have a quick question.
go ahead, Carl.
Okay. Hey, JT, how similar are your bylaws? Like, do you look at other fire departments and is this similar to other fire departments requirements or, how different are the volunteer fire departments in terms of their requirements?
Our bylaws are just separate from the pension plan itself, like they're two completely different things. But because the pension plan specifically references our bylaws, that's why we brought it here. Our bylaws are the original from 1924 and they get reviewed every 5 years. So that as the fire department added different line officer positions or OSHA made requirements for training, that kind of stuff. The bylaws have matured over all those years to what they are today. I can't say that we really review other area volunteer department bylaws, but we do look at sort of like law relating to labor and things like previous to this bylaw update. If a member didn't make their meeting requirements or training requirements, they'd actually have to report before the membership to explain why we should keep them as a member. And now those are, because of laws, that's changed to a meeting with the chiefs in private to discuss their delinquency. So again, we really don't, I guess it's not really checked against other towns, but I will say several times a year, maybe half dozen times a year, area departments in Connecticut reach out to us for a copy of our pension plan because ours is pretty thorough. And so it just recently Guilford requested a copy of it. So we share ours with other people a lot.
Okay, thanks. Yeah, I know Guilford is partly paid, partly volunteer.
Right.
So one other thing, really not a question, more of a comment update. The state this year, volunteer fire departments, our department happens to be, I believe, a healthy department in terms of membership. There's a lot of, and JT can tell you this, there's a lot of area departments, there's a lot of departments all over the state that are volunteer that struggle to have members make calls, to have enough members. And, obviously there's the real estate, I'm forgetting the word that JT just used. The real estate deduction that we allow the firefighters, a couple other things we do, obviously the pension, but the state this year also tried to incentivize it and it passed into law. And one of the things is tuition at all state schools or the community colleges is free for volunteer firefighters.
I haven't read the final passage of it, but I thought it was community colleges, but I'll double check that.
Yeah, but in any event, the state recognizes there's an issue and the state is trying to address it. And one of the things a lot of the towns and cities said to the state was, you can keep increasing all these deductions and abatements and all that stuff. That just raises the property taxes for the rest of the local population. And we asked the state to start doing some stuff. If you want to do more, and they did more this year, but if they want to do more, maybe it's an income tax deduction. So, there's a lot of legislation that goes on at the state level that falls onto the local property tax. So we really encourage them to do some other incentives this year, and they did. So that was good. Anyway, that's all I got. Thank you.
Thank you.
Just a clarification from me, this is Leland on the phone. I'm just looking at the memo right now, and it just looks like the change you're asking for or hoping for is, as opposed to it saying 150 points, you want it to specifically say responding to a minimum of 30 incidents. Is that kind of the language change that we're hoping for? It's as simple
Right,
as
we're
that.
adding 30, you're correct, we're adding 30 incidents to the requirement of 150 points. You know, previously, somebody could have done a lot of training throughout the year and weren't available to get out of bed at 2 a.m. To become an EMT is probably 180 to 200 hours. And the basic firefighter training now to get certified is equally maybe 150, 180 hours. And so they have to do that. They have to do those things just to participate. And so it could be quite a burden in your first couple of years, but we want to make sure that people get to the calls. There is, we did add something in here where, you know, if you were injured, had to, you know, get rotator cuff surgery and, you know, you made your 150 points, but you had, you know, 27 incidents, you could request a waiver from the chief for an extraordinary circumstance. And we had to put that in here too, because we didn't want the chief to give a waiver without, you know, the ability to do that.
Yep.
It
Yeah,
sounds,
and
go ahead.
I was just saying, I'm seeing going from the memo now to the actual Town of Old Saybrook firefighter pension, and I can see the line item that you're changing. It's really simple. So
Great.
Lorraine?
Just want to say, it sounds like you're tightening up the requirements so that the people in the town get more of the benefit from the firefighters. So that somebody who does, like you say, a lot of training, but doesn't go to any calls isn't really as much of a benefit as somebody who goes to 30 calls a year, let's say. And you're making sure those are the people who get the pension benefit.
Yeah, exactly. Our core mission is people in turnout gear and fire trucks. And if we can't do that, then we've got a problem.
That's great.
How many calls on average,
We do about 500 a year.
but per person?
That's a good question. I don't know. I just looked at, we just ran the numbers because we have about a week left in the fiscal year for the tax abatement. Somebody like Cole Bushnell, you know, he'll do, you know, I don't know, 490 out of 500 calls. And then there's, you know, other members, you know, have 20, 30, but I have to look at an average, but I'll bet it's 60 to 80 probably.
Okay, so that number 30 that you picked is a
It's
very modest number.
exactly, it's very, right. We didn't want to cause, you know, issues at home and, you know, all that other kind of stuff, but we did want to have a standard that people should live up to. And like I said, when I looked at the last 5 years of, or last 4 years, and, those numbers were between, the lowest number was 7 runs and the most was, 26. So some people just need to get out of bed a little bit more. Some people really need to step up to the plate. So it's the same for everyone.
Understood,
Yeah.
understood. And in terms of Carl's observation that our fire department is healthy, which I was glad to hear. Do you feel like you have enough volunteers? How?
We'll never have enough, but we have over 80. And when you look at the area departments around us, we in some cases are double to triple their size. And so we're and a large number of those people are interior firefighters. You know, they're able to do everything rather than just direct traffic or whatever. You know, you need a full mix of everybody to do the whole job of the fire department. But right now, knock on wood, we're at a healthy number. We're always recruiting though, so we'll take anybody who's interested in joining up.
Good to help. Awesome. Okay, any other questions for JT? All right, then I think we can have a motion.
I'll make a motion to amend the plan document for the request of the fire department to add the additional requirement of responding to a minimum of 30 incidents per calendar year.
Just modify that slightly. I think that we're approving the modification. Then the recommendation has to go to the Board of Selectmen for their consideration and approval to actually amend. So with that modification that we are approving the modification you just described. Do we have a second for that? I see Lorraine.
Yep.
Great. Any further question or discussions? All right, all in favor, vote aye.
Aye.
Anybody opposed? Or abstaining? All right, it is unanimously approved. So it has been, the modification has been approved and it will now be submitted to the Board of Selectmen for their, I guess, final approval.
Perfect, thank you very much.
And thank you, as a lawyer, I have to say, I looked at the draft document. I was very impressed with how you simply and concisely added that additional
Thank
requirement.
you.
Lawyers probably would have added a lot more words.
My son's in the fire is right now studying for the bar, so I'll mention that to him.
Awesome. Well,
Thank you.
good luck for him.
Thank you. Have a good day.
Thank you, too. All right, moving on our agenda, we are down to the pension liaison report.
Good morning.
Good morning.
Okay, starting at the top. For the June 1st pension gross payroll, the town PD Board of Ed, 98 retirees for a total gross payroll of 176,404. That's plus one QBRO spouse for 99 total participants. No additions, but I did just learn after this memo was written that we did lose one pensioner. She passed in September of last year. We just learned about it last week.
We've been paying all that time.
So we have been paying all that time. So we have a major chore of not only recouping those funds, and I've spoken to her son, and that part should actually be very smooth and easy. But we have to reissue her tax document for the 2025 tax year, and we have to do an amended return. So that will be our chore. We know exactly what we need to do. It's just not the best timing because it's fiscal year end and we're busy. But we will have to do that. So that figure is going to be reduced by just over $700 monthly going forward after starting July 1st.
What's the amount of the recoupment we're looking for?
It's a little over 5,000.
We'll give them time to pay soon.
Well, the money's just sitting in her account. According to her son, the money's been direct deposited to her account. That account has not been touched. The money's there. And because we've sent it by direct deposit, we can do a debit ACH and just pull it back.
Excellent.
I don't know if her bank will interfere,
Yeah.
but on our end, we're able to do that. So I'm gonna attempt that and see how that goes.
Thank you for acting so quickly. Once it came to your attention.
But then we have to do the amended tax return, filing and everything. And then next month, the figure will change. So then fire department, 41 retirees, gross payroll of 17,304, which includes one QDRO spouse, so 42 total participants, no changes there, none anticipated. In pending retirements, of course, we still have Leanne scheduled for September 1st. And then now we have the lady who passed, her name is Lorraine Shepherd. She was the beneficiary spouse of a former Board of Ed employee. So there's no continuation beyond her. The current DB and DC plan active employees as of the end of May, we have in the defined benefit pension plan, 26 contributing police officers, 20 town employees, and 18 Board of Ed employees for a total of 64. Which only includes one increase. We hired a new police captain at the beginning of May, and so that's the one change to those numbers. And he did elect the 3% additional match plus an additional 2%.
Woohoo!
So, yeah. The defined contribution 401 has 49 contributing town employees, 33 Board of Ed, for a total of 82. The total plan balance as of the end of May was $3,400,702, which is an increase of a little over 200,000. The town's 457 has 91 active employees, and a plan balance as of the end of May of $5,583,361, which is also an increase of just over 200,000, which is nice to see. 78% of our DC participants have elected the additional match. That's 88% for the town and 64% for the Board of Ed. And I have started tracking the pattern of fluctuation in balance. And overall, year to date, calendar year to date, we have seen about a 5% average increase.
What is increasing on that average?
The balances of these plans, the 401 and 457, just an average overall, because we've seen some ups and some downs, but as an average overall, the increase has been, the averaging about 5%.
Okay,
Which is nice to see.
thank you. That's all. Any questions? Thank you very much. All right, on to Morgan Stanley's reports.
Great, thank you. So there was no update to the market perspectives this month, so a lot of the same themes basically that we talked about last month still apply. Morgan Stanley has an 8,300 price target for the S&P 500 for the next 12 months. We still think inflation is going to tick up because of some of the residual effects from the war in Iran. The 10-year is about 4.45 right now, so still kind of relatively high, in relation to the last 12 months. And then we did have a Fed meeting with the Fed chair, which was interesting. They held rates, steady, but there were, I think, 4 or 5 Fed board members that did vote to increase rates. And so we're still expecting more, I'd say, pressure towards rate increases rather than rate cuts as we go into year end here. But just in terms of performance, just want to give the update for June. So month to date, we're down 0.25%, 25 basis points. That's versus the IPS that's down about 1%, and the 60/40 that's down about 152. That's as of last night's close. So even with this volatile month that we've seen here, especially the volatility we saw last week, we're holding it very, very well. And when we look at the fiscal year, as of again yesterday, it's up 10.2% versus the 60/40, which is up 13.56. But this will be the 5th out of the last 6 years that will have double-digit returns in the town pension. So just want to go to page 4. So again, upper right-hand side, we've got again, all-time high balance of just over $31.5 million. Fiscal year return at the end of last month was 11.13 gross and 10.45 net. Trailing the benchmarks, which we had kind of really gone over a lot last quarter or last month, I should say. $720,000 projected income coming in the next 12 months. That's a little bit higher than we've seen on the last few years. And then in terms of just want to go to the next page. In terms of the risk return, you can see, we are in that lower left-hand quadrant, lower risk, lower return, but our standard deviation is about 1 turn less than the IPS, and about 80 basis points less than the 60/40. So I want to go to the next page. So this is the risk return over basically the last 3 years. You can see again downside protection upper right hand side in terms of losses in different varying periods, down capture ratios that are less than the benchmark. In terms of our Sharpe ratios, certainly have done a little bit better when we look at 20 to 23, which included the 2022. Obviously, this is the upper left hand side here time period. And the 2019 to 2022 time period. And while we've had, a pretty decent return the last 3 years, still, obviously lagging the benchmark IPS in terms of our Sharpe ratio. We're basically, 65-35 in terms of equities to fixed income cash. Just want to go to the next page. Cash is a little bit over the IPS suggested value. I think it's just a timing issue because some bonds that come due, they need to reinvest those bonds. And then usually what happens is when dividends come into the portfolio that are not being used or getting reinvested, we're coming up in quarter end. My guess would be that, that's going to be sort of resolved, I would say, by the end of this month. Performance, if you want to go to page 9. It's in terms of the month. So last month, lagging the IPS benchmark by about 190 basis points. again, we had a lot of in May, we had a lot of obviously upside with a lot of the AI stocks and a lot of the IPOs that we had talked about. This month, again, there's been a little bit more volatility and concern over especially semiconductors. So even though we lagged last month, now we're outperforming this month on the downside. If you go to page 11. In terms of, changes, you can see, the cash, looks like there's a big change, but again, I think that's a timing value. S&P, down about 86 basis points from last month. International down about 82. Short-term bonds, we increased by about 194. High yield bonds have decreased about 60 basis points. Page 12, just in terms of returns here, you can see that basically US equities and large cap have done extremely well. Mid cap and small cap don't so much. That's flipped again this month. Small cap and mid cap have actually outperformed large cap. So we're seeing this sort of, again, playing out month after month after month. No real direction in terms of a trend. It's really just like one month you're seeing tech do well, the next month it's not doing so well. One month, international emerging markets doing well, the next month they're not. But the net of it is, again, we're sort of balanced out. Again, the diversification is helping out in terms of the risk, and you are still getting a double-digit return on the fiscal year. In terms of the managers, who are on page 14, just want to point out, so Aristotle is still on here. There's $266. That down 90% is not a real, that's sort of like a calculation error just because of how much money we've taken out of it. But there's probably like a fractional share in there that they're still holding that we just need to move out to Davis. So we will correct that. But Davis, if you look at the custom period, basically in line with the benchmark. John Hancock did a little bit better this quarter, but is lagging pretty significantly in terms of the custom period. That's because they've been, again, underweight some of the technology names and overweight some financials. London is one of the managers who's actually doing very, very well this month in terms of June. They're up about 150 basis points relative to the S&P that's down 250 basis points. Mid cap, Kate Anderson, while, again, this in terms of this last quarter, not looking really good, and certainly happy that we've added the index in there to sort of compensate for that. This quarter, again, sort of a flip from that, which Kate Anderson is up 180 basis points, slightly better than the benchmark and slightly better than the index that we have in there. And then Siegel Bryant, which again was lagging in the last quarter here, is up almost over 500 basis points over their benchmark just this month alone. So small caps have really seen a real inflow of capital in terms of their relative valuation to large caps being at a very big disconnect. Schroders is another one that's doing very, very well in terms of this month, but it was sort of like lagging in terms of the quarter last month. They're up about 150 basis points relative to the MSCI in June. And Lazard, again, lagging their benchmark, but doing a little bit better than the iShares of emerging markets. And then we look at being short-term fixed income. Again, that's been very, very helpful with the 10-year going up as it has, as I said, last 12 months up 475, beating their benchmark, and certainly better than intermediate maturity bonds that we have with Boyd Waterston by about 75 basis points. Page 17, we already talked about the IPS suggestions.
Excuse me, Kev.
Yep.
On Kane Anderson,
Yep.
at what point are we going to prune that?
Well, I think, again, they've
I
had
know it's only been a year. but-
Yeah, it's only been a year. So I think one of the things that we have to be, concerned about is the lack of the low quality names that are part of the index now, especially with small cap and mid cap. We've talked about that ad nauseum, I think, for like the last 6 months. You had Wendy's the other day that was up almost 50%
Wow.
on the burger chain, right? On nothing else, the fact that basically the chat boards decided they wanted to be the next main stock, like AMC was, right?
Wow,
That's the only reason. It was up 50%.
that's amazing.
That's part of the mid cap index. Okay, so again, something that not necessarily every active manager is going to hold because of the quality of the portfolio. Becomes a larger part of the index because of the market cap weighting, right? So I tend to be very, cautious about, trimming an active manager that is focused on quality when the index itself is, relatively low quality in sort of nature right now. But yes, the underperformance is something that is very significant, and we're certainly very concerned about it. And that's one of the reasons that we trimmed it, just a few months ago and added the index to sort of balance that out.
Right. Okay, thank you.
If you want to go to page 21, what I find interesting is that, again, we moved a lot of fixed income over the last, let's call it 4 years, right? In terms of, we used to be closer, I'd say, to 70, 30, 75, 25. We're closer now to 65, 35, right? In terms of reducing risk. We have the yield to maturity to the whole bond portfolio right now at 490. Okay. So just the bond portfolio over the next few years, or the next 3 years, basically, because we have a modified duration of 267, it's going to give us 490. All right. Our actuarial assumed rate of return is 670. So that's 73% of the return that we're getting just from the bonds in terms of, our actuarial assumed rate of return, without the stocks having to do really much. Right. So again, this is one of the reasons I think we moved over to bonds, but basically getting a yield maturity that just under 5%, we find very, very attractive right now. The last thing I sort of want to point out in terms of like the divergence of all these different sort of, factors, just this year, go to page 31. And you look at sort of like the middle row there, which is the fiscal year, it says custom period 6/30/25 to 5/31/26. We talked about being sort of, quote unquote underweight growth. When we look at large cap growth relative to large cap value, we're actually overweight a little bit growth in terms of the portfolio relative to value, just not overweight growth in terms of like the index, right? It's more balanced. We have a more balanced approach in terms of growth to value, but you can see the custom period for our growth stocks, 28% versus the benchmark of 20%. Okay, so our growth stocks have actually done pretty well in terms of the US exposure. Our value stocks have actually not done well, up 5% versus 24%, right? Same with mid cap growth up 692 versus 333 for the mid cap growth index. Mid cap value 965 versus 2290, and a lot of that has to do with that quality that I was kind of talking about. And then when we go into international, if you just go to page 32, Asia Pac ex Japan up 64%, ultra short-term fixed income up 416, and short-term fixed income up 331, both outperforming their indices. So again, big divergence of what's going on between growth and value, and it's changing month by month. If we looked at, once we look at it basically at the end of this month, I think because of the volatility we're seeing, we'll probably see the growth and the value stuff kind of reverse. Because a lot of the value managers are doing a lot better this month. But the net of it is, again, another decent fiscal year. It's going to be something that we're going to have more gains to sort of put forward, on the next 5 years of amortization that we've had. And that's going to make it so that the ADEX should go down for the next fiscal year.
I have a question.
Okay.
It's back on page 16.
Yep.
It's one of the scripted ones you guys have done for us. I recall Paul asking for this one. And
Yes.
it's certainly in a way that I can see it for the first time, how all the managers are performing. Am I reading this correctly that on the last 2 columns, the performance versus benchmark for the last year or the last 5 years, except for the ones that are new, so they don't have that comparison.
Yeah.
Basically, all of our managers have underperformed.
So we have Boyd Watterson as for the year or for the 5 years.
I looked at both. I see negative numbers everywhere.
Yeah, so there's a lot of negative numbers. Okay, we talked about Aristotle. Well, Aristotle we got rid of, so that's one of the reasons that's on there. the fixed income again has done, very, very well versus its benchmarks. When we look at the 5 years and even the
Is there a positive number on there? I'm not seeing.
yeah, there's Siegel, Bryan, Hamel on the 5 years.
Mhm.
And then, Boyd Watterson are the two, and I'd say that, parametric is 3 basis points. The S&P 500 index is 25 basis points. These are all, net of fees too, so that's one of the big issues, but yeah, we've been disappointed. I think we went over this, last month, the allocation decisions I feel like we've made correctly, and the managers just haven't performed well, right? So that's one of the reasons that we've been moving more towards the indices, with a very, cautious approach because of, again, the valuations that we're seeing in a lot of the indices and the stocks that we are, and the concentration risk that we're worried about in some of the major indices. So I don't want to be giving up on active management at a time where I feel like, especially with this last month and the volatility that we've seen, that if we do see a, correction in the market, they would be able to protect a lot better on the downside. And that goes back to, page 6 that we kind of were talking about in terms of the downside protection, right?
Okay,
But yeah, the performance has not been anything that I would write home about, but again, it's not anything that has necessarily, hurt in terms of the ADAC. 5 of the last 6 years, we've had over double-digit returns, so.
Thank you.
Any questions?
All right, not hearing any. Anything further? Oh,
I have one
I'm sorry.
question on, with Warsh coming in as the new chairman on the Federal Reserve, the fact that they did away with the forward guidance and the dot plots, does that really, do you think that'll have any impact on allocations going forward?
Well, I think what it'll have an impact on is the forecasting, right? That's part of, like, you can kind of see who's voting what and the changes that are sort of voting. So the transparency is gonna be less, which is never a good thing. But that's why you have also, the treasury, sort of like the futures market, right? So Fed fund futures, I should say. And the markets will still continue to direct where they think that the Fed is going to go based upon language that they say, based upon things they're seeing in CPI and PPI, right? Based upon the trends they're seeing in unemployment. But in terms of, I think the transparency of seeing, where things are shifting and changing from a meeting to meeting basis, that's going to be tougher to sort of to gauge. I don't think that's going to affect how we allocate the portfolio at all. Because right now, the headwinds are, we're going to see higher rates for longer, right? And if anything, I think we talked about this before, that if the Fed did cut now for whatever reason, I don't think the market would take that very, very well. Because that means that there's an underlying issue that the market was not paying attention to.
Okay.
Yep.
Kev, I'm still concerned about the massive new issues coming out, and the impact that they'll have on our index. Obviously, in particular, the S&P.
Yeah.
And I know that's only I think it's only $1 million, but every little bit helps. And we're going to have Anthropic come along and OpenAI. And at some point, SpaceX will be added to the index.
Correct.
So I'm just curious what's Morgan Stanley think of what to do?
Yeah, so Morgan Stanley's always said they want to be more equal weight S&P 500 than they want to be market weight. They've kind of been saying that, I say, over the last year. And again, it's had various degrees of success depending on what month you sort of look at it.
That relative performance would have been not satisfactory.
Yeah. But when you look at the charts, basically, it's like the equal weight was doing very, very well as we went into the beginning of the year, especially going into March when the Iraq conflict started to happen. And then on the rebound, basically, it's done a lot worse. But they're still expecting over, more periods of time that the equal weight should be a better place to be, given the tech exposure that we get. We feel like it's gonna go to 40 to 45% in the S&P 500. And that's one of the reasons that we're more balanced between growth and value than we are overweight one or the other. So I think we're having a more balanced approach in terms of just our index exposure. And when we look at, again, the volatility of these names, I mean, SpaceX already has gone from, 150 to 220 back down to 150, right? I mean, that's the stuff that we want to try to avoid in terms of the pension portfolio.
But you can't avoid it. You can't avoid it.
Personal, you go right ahead, but in terms of, the pension portfolio, that's the kind of volatility we're trying to.
Steady.
Yeah.
That's steady.
So, but yeah, so being more equal weight going forward, we feel like will be helpful in terms of, the types of concentration risks that you're talking about.
We'll see.
Any other questions? And do we have another portion of the presentation, or are we all?
I mean, the only thing we can go over the fire too, it's, very, very.
I
similar.
love the fire, and since we had JT, let's do that.
It's the same, basically, but. We can do it.
There we go. Yeah, so, 10% for the fiscal year, again, similar situation where, it's basically down about 25 basis points this month, relative to the benchmarks, doing much, much better in the month of June. But again, 5 of the last 6 years, double-digit returns. You can see the last 3 years up 11.21, all-time high of the fire portfolio, just under 2.3 million. Page 5. Even lower standard deviation than we have in the pension portfolio at 798, so it's about 1.5 turns less standard deviation than the IPS or the 60/40. Page 7. This is a 60/40 portfolio in terms of what we have because of just the manager minimums and things like that. So it's a little bit different than what we have in the pension portfolio. And then we're page 11, just to kind of give you a sense of the ranges. Again, cash a little bit over, but I think again that's just a timing issue. But up 81 basis points from last month, and there's high yield bonds down about 80 basis points from the month. But basically, very similar portfolio, very similar characteristics, the same managers. And then in terms of, if you want to go page, let's see, it shows the fixed income. It's on page 19. A little lower duration, a little less yield to maturity in the fire, just again because the manager minimums we have.
Okay, well, thank you. All right, well, if there's nothing further from Morgan Stanley, any other business, old or new, we would like to take up before our summer break? Okay, well then, I guess we'll take a motion to recess for the summer. So moved. And I'm assuming we're all in agreement. So note that the next meeting is not until September. Those of you like me have it on the calendar every single month. We're not meeting until September.